Okay, so let's start now. Um, I'm so sorry that we didn't start earlier. I'm having some network issue. Okay, so yesterday we were supposed to have a class, but I didn't finish up on time. So today, I think this is not your first time attending to one of my private class. Okay, so um, right now there's so much things that you need to know about trading in binary option. Okay, I think I saw your message a few days ago, or maybe yesterday. You said that you you are trading and you are making some profit. Then along the line, you start to miss out some trade, and finally, you end up blowing the account. Okay. So one thing I will let you know is that what you did right there is over trading. Is over trading. When you over trade the market, you end up blowing your account. Even though you make 100 winning trades, if you make 100 winning trades, if you overtrade the market, you will blow your account. There's no matter how, you will not blow your account. Okay. Um, no, when we are talking about money management is all about how to manage your capital. Okay. In money management, the forex is about risk and reward, the amount you risk and the reward you're going to get, or the amount of profit you're going to make after you open a position. But in binary it only depends on number of trades. Okay, the amount you stake and also the number of trade. Okay, so I will advise you from today, do not take trades daily more than 10 trades. If you are taking trades more than 10 trades, believe me, even though the 10 trade is a winning trade, there's something that will still be pushing you to take some trade, to take another trade, so that to make it up to 20 trade or 30 trade or 50 trades. And before you know, if you start to lose some of the trade, you end up blowing your account. So what I'm trying to say is that do not take trades more than 10 trade in a day. That will help you make consistent profit in trading. Trading is all about um, discipline, knowledge, and understanding. Discipline is when you discipline yourself. Like once you accomplish 5 trades, stop trading immediately. Okay, stop trading immediately. Do not trade. Do not take any trade at all. Okay. Then knowledge is for you to able to analyze the market, like for you just like knowledge and understanding. Okay, you understand the price, that okay, if price is bullish, you know that market is bullish, it moves like this, right? Okay, so that is the knowledge. You have already know that this is how the price move. Okay, so you know that price move like this is bullish market. If price move like this, it's called bearish market. So in bullish market, always look for potential buy opportunity. In a bearish market, look for potential sell opportunity. But in a case whereby the market decided that okay, the market decided to shift from bullish to bearish, then you should know that this is how it's going to form. If you want to trade a market shifting from bullish to the bearish, you should know that when the price is moving up, it's creating this swing low, and this swing low has been taken out. So definitely, your entry point should be somewhere around here or somewhere around here. Okay, so you know that the market is not likely to move down. Then also, I want to let you know something in binary option. If we have a support level here, or let's say a demand zone, okay, you expect the price to reverse from this demand to the upside, right? Okay, but in forex, what we need is that once the price reach the demand, we expect the price to continue to rise higher. Okay, but in binary, do not expect something like this. At least if you can open a trade with a 3 minute expiry time, you should know that it is expected the price will likely to go up for 3 minutes. Okay, so anything can happen after 3 minutes. The market can decide to go down and consolidate for a while, somewhere around here and somewhere around here like this. Okay, so in that is why your psychological in trading binary options should be different from trading forex. So in forex, you can open a position from here, expect that the price will go up to this level. Okay, it might likely to go up to the level, but in some cases, let's say your stop loss is somewhere around here. Okay, your stop loss, your that is your risk, your stop loss, and you see the price come down, consolidate for a while, and finally reach your target. So with this movement, it might take some time. Sometimes it take days, it take hours, it take minutes for it to reach your target. So your psychological trading in binary options is quite different from trading forex. That is why some of my trading, I usually trade 1 minute candle and 1 minute expiry time, or 1 minute candle and 3 minute expiry time. Okay, because that is exactly for binary option. So I have so many. I have I have a video, like I would like you to show you one of the video. But first, um, there's something that I want to show you here. Okay, but first, I created a I wrote a PDF file on how to trade candlestick pattern. I did not complete the PDF. Okay, I did not complete the content. So in the meantime, maybe by next week, I'm going to complete the full content. Okay, so I want to show you how to trade um, bullish pattern. You know, when we are talking about pattern, candlestick pattern, we are talking about um, the hammer engulfing, spinning top, shooting star, something like that. So there's no need for me to um, go through some of this topic. I think you have already know the candlestick pattern. And also, I knew that you have a little knowledge about candlestick psychology. So that is why I will not go to that. But I'm going to show you how you can easily trade this pattern. Okay. So take a look at this example here. Okay, this is the PDF. I might like you to share you the PDF so that you can read read it. Okay, this PDF, in this PDF I only indicate um buyers area, or we call zone, or sellers area, or we call it zone. Okay, so I indicate that this when the price approach buyers area, what do? You buy the market, right? And if the price approach sellers area, what do? You sell the market. So you've already know what we mean by buyers area. It's also known as demand zone. It's a price range where the market is expected to exceed supply. So this lead to this lead to price support as more buyers are willing to enter the market, pushing the price upward. Okay. So the buyers zone often form after a decline in price, where price drop to a level attractive enough for buyers to step in. Likewise, the sellers as well. Okay, sellers is the opposite. Okay, so on the other hand, the seller zone or supply zone is where supply exceed demand. So now, what are the key characteristics of a buyers and seller zone? When you are trading this buyers and seller zone, what do you need to observe? Okay, number one, you need to observe the volume spike. Sometimes I can say that this is a volume spike, or you can say the sign of strength, SOS. Sign of strength is when the market decide, or let's say when the price emerge from a particular area. The price emerge from a particular area, let's say this is support level, and you have a strong candle after when the price reach the support level. So this is what we call, this candle here is called sign of strength or a volume spike. So buyers and sellers zone are often characterized by surge in volume. So a sudden increase in buy or sell order can indicate strong interest, helping to validate this zone. Okay. Then the next one is the price rejection. When you see price start to reject in a particular area or zone, it means that the market is showing as showing a sign that is ready to reverse. So this zone also show repeat price rejection where price bounce off key level multiple times, indicating the strength of either buyers or sellers at those levels. Then the next one is the historical significance. What I mean by historical significance is that both buyers and sellers zone are often derived from historical price data. So that is why anytime I'm trading, I always go to the left side to draw buyers area and sellers area. Okay, so traders look for traders as for areas of previous support or resistance, assuming that price the past price behavior can be reliable predator of future movement. The next one is the candlestick pattern. Okay, now this is the most important part. When you are trading candlestick pattern, you see the market is approaching a certain level, and this candlestick pattern form, it indicates the market is ready to reverse. Okay, but when the price is still continue to move and the candlestick pattern form, sometimes it indicates the market is likely to continue. So the candlestick pattern are used to predict price direction or future price direction of price movement. When this type of candlesticks appears on the chart, they can signal potential market reversal. Take a look at the example here. You see this market structure here, you see this chart. Where can you find sellers area and buyers area? If you look at this shadow here, this is sellers area because when the bullish candle reach this point, a strong spike of sellers enter the market and push the price down. Also, the price stop from this level, you see some sellers entry. Again, rejection and sellers entry, which means that this is the next sellers area. Okay, the next sellers area. Now, where is the buyers area? This is buyers area because when the price reach this point, you can see a huge rejection from buyers. Rejection, it indicates that this is also buyers area. Okay. Then if you look in the middle of the chart, you also find some buyers and sellers area. Take a look at this example here. You see this rejection, sellers, rejection, sellers, rejection, sellers, rejection, sellers. So it means that there's also the sellers around this area. So if you draw a trend line connecting the movement here, here, and here, and also this rejection, okay, you can see that after the market violates this sellers area, after the price violates this sellers area, you can see from here buyers entered. Immediately the price reached this level, there was a huge rejection from sellers. Then again, there's a strong rejection from buyers. You can see rejection from buyers. The market decided to break this trend line and continue to push higher. Okay. Then again, the market creates a correction move. Okay. This lower rejection and buyers again continue to push higher. Okay. Okay. Then again, rejection and a bullish movement. So, what do you see in this kind of situation here? Notice where the buyers enter. Buyers enter from this level. Okay. Buyers enter from this level. Okay. Then also buyers enter from this level. So if I want to draw my key level here for buyers, because also there are some buyers around this area as well. Okay, there are some buyers around this area because you see buyers enter from here, buyers enter from here. So if I want to draw it, I will extend the line to the left side like this. Okay, then also from here like this, and here like this. Okay, so anywhere the market reach, okay, sometimes you can see red candle a strong red candle violate the first zone, continue to the second one, or likely to violate the second one, continue to the third one, and has a rejection. Okay, so if you see this kind of movement, it means that the market violates all this zone and continue to the third one. But in this case, you see the market start to lose momentum. That is why the first candle here form an inverted hammer, followed by a spinning top. A spinning top shows a sign of bullish market, right? Expecting the price will continue to push higher. Okay, because this spinning top, this candle stop here showed a sign of sellers losing momentum, and this candle showed a sign of reversal. Okay, because it has both upper and lower and upper rejection. So it's indecision in between sellers and buyers. But in this case, there are some buyers around this area. Definitely, you expect the price to go up from this level. So because this candle show a sign that is a sign of reversal. Also, the body of the candle is green. The color of the candle is green. Also can give us assurance that this is a sign of reversal. Let's see what happened there next. Okay. So now you have already seen how I was able to indicate the buyers and sellers here. So let's see what happened next. You can see what happened here. This is the buyers area. Number two, inverted hammer. Number three, spinning top. So my next candle will be what? A green candle. See how I trade the pattern, the candlestick pattern. Very simple. Okay. So let's see another example. Take a look at this one as well. First, when you open a chart, when you see something like this, first you have to locate the buyers area and sellers area. Look at this area here. You see multiple rejection, so many rejection here, which means that the rejection started from here, okay? Started from here and end here. So if I extend it to the left side, it indicates buyers area, okay? Because here we have, you see rejection, 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 reversal. Then now when the price reach the level, we also have rejection, rejection. So what we need is a candlestick pattern that will give us that, okay, yes, we have to trade a sign of reversal. Okay. Now we have already indicated the buyer's area. Now where's the seller's area? Look on the left side. Okay. If you look on the left side, you will notice that this area as well is seller's area. Why I say this area is seller's area? Because we see from here rejection, reversal. You can see rejection, sellers, rejection, sellers, rejection, sellers, rejection, sellers. Okay, and a strong candle and sellers. But finally, when the price continue push higher, so we see sellers again enter the market. So which means that if buyers enter from this level, my next area where I expect sellers to enter is here. Okay, and you can see there's a gap from this level to this level, and also we have a candlestick pattern from buyer's area, a candlestick pattern, which is a bullish engulfing pattern. So a bullish engulfing pattern from buyer's area, what will be the next candle? The next candle will be bullish, right? Also, you might be wondering why is it that we have a hammer candlestick here, but instead next candle to be green, next candle was red. A hammer candlestick should not be far away, like the opening of this candle here should not be far away from this level here. Okay, a hammer candlestick should be something like this, be something like this. Okay, okay, so it's something like this, not like this, not like this, because the opening price is still far. There's a gap to the opening price to the zone, so definitely sellers might likely to fill the level. So that is why this candle did not form green candle. That is why the price did not form green candle next. Instead, it formed red candle, just to fill the gap to the buyer's zone. And then from the buyer's zone, buyer's entered. It engulfed the previous red candle. So what it means that there is a huge rejection. There's a huge the volume from buyers. So let's see what happened to this level, to this trade. You can see our next candle is green. So what I said is that here is that this is buyers area, bullish engulfing, next candle. You can see very simple. Then the next one, let's say for example, this is another market here. Let's find buyers area and sellers area. You have already know that this is buyers area, right? Okay. Also, we have some buyers area around this area here, okay, because we have rejection and bias. Then here as where we have sellers, okay. So if I extend it to the right side, you see that market already engulf the sellers area. So my prediction is that if next candle will form red, at least buyers should enter from here or continue to this level. Okay. But also there's another possibility that buyers might enter. Take a look at this trend line. So from here to this level, then extend it to the upper side. Now, it's possible the market will form red, reverse from here, or form red candle and no reversal to this level and reverse. So what do we expect here? We expect a reversal, right? Or let's say we expect next candle red. So let's see what happened. You can see next candle red. So what did I indicate here? And why did I say next candle red? First one is the sellers area. Like I said before, I've already indicated the second sellers area. Second one is the shooting star, a reversal sign. A shooting star from this sellers area showed a reversal sign. But instead, the price continued to push higher and close as next candle green. But immediately after green candle, next candle quickly formed red, which is the third one. And the bearish candle formed, which is the third reason. A bearish engulfing candle formed. It engulfed the previous green candle. So that is the third reason. So the next level or the next bias area level is here, like I indicated before, or you can draw a trend line to find bias area, or you can draw horizontal zone to find bias area. So the next level, we can expect bias to enter from here. We don't know yet if bias will likely to enter or not. But we know that next level of bias area is here. So my next candle will be red, okay? And that is a winning trade. So again, look at this. Where is bias area? Bias area is here. Look at this market structure. What do you see here? Market is bullish, right? So definitely market is bullish, creating this swing low. So bias area is here. And also we have the sellers around this area. Remember the characteristics of buyers and sellers zone. I said something about rejection, multiple rejection. See multiple rejection. It indicates the buyers area. Also here, sellers area. Okay? Sellers enter from here and buyers enter from here. Sellers entered again and buyers reject and close above, or sorry, close below sellers area. And this candle indicates a sign of sellers, a sign of sellers rejection. You can see a huge rejection from sellers area followed by a sign of strength. Okay, followed by a sign of strength. It also indicates a bearish engulfing. You can see a very strong rejection from sellers, followed by a strong sellers candle, sign of strength. So definitely, market is expected to go down because of this indication. No, so let's see what happens next. You can see from sellers area, we have a shooting star, also sign of strength that engulf the shooting star candle. So next candle drop. You can see why the next level is here. next candle drop. So that's a sign the sellers is ready to go down. If you see a rejection from sellers followed by a strong sellers candle, so next candle will be red. Okay, so that is how to trade candlestick pattern. The next one I want to explain is this. Okay, so here, um, you know, when we are trading inefficiency, when you are trading inefficiency, it always indicates the multiple where there's enough buyers and sellers and without any interruption from both traders. Like for example, if you see a strong candle here, it means that there is a strong red candle that form a strong red candle form without any interruption from buyers. Same thing like this, a strong green candle form without any interruption. That is why we call this inefficient. You can see very strong green candle. Okay, so and the inefficiency started from here to here. So now it means that from here, from here to here is only buyers activities, only buyers are present. Okay, from here to here, only buyers are present. So when the price drop to that level, what do you expect? We expect the market to reverse, right? So let's see if that is the case. Okay, let's see if that is the case. You can see immediately this candle close. You can see after from seller's area, next candle form hanging man, followed by a sign of strength, followed by next candle red. The next buy zone is here. So this candle did not reach the buyer zone. So definitely, because it is a sign of strength candle, so market is expected to go more down for 1 minute candle before we can expect buyers movement, buyers entry. So next trade, I think the next candle will form green because it's now at the buyers zone. Okay, so let's see. You can see, next candle form green immediately. Next candle form green. FVG, the fair value gap, next candle green. Okay, let's see another example. Okay, now this one, look on the left side, or also look at the current price market. We have we have sellers. Okay, we have sellers and we have buyers. So where this candle formed, this candle formed from buyers. And where is the next seller's entry? Next seller's entry is right here. Okay, so what do you think is going to happen? My best guess is that we expect the price to form green candle because this is a sign of strength. This candle, this green candle is a sign of strength from buyer's area, and this is a sign of reversal. So let's see what happens next. Okay, you can see what I said. Buyers, sellers. Okay, buyers, sellers. So sign of strength from buyer's zone. Next level is here. Okay, so immediately the price reach the zone, you see a huge rejection from sellers. Instead of next candle to be green, to be red, market gap up. And when the price gap up, it now show a sign of reversal. Okay, this candle here is a sign of reversal, but we are not sure yet because of this sign of strength candle. Okay, a sign of reversal which is supposed to be closer to this trend line, but the candle closed here. So there's still a gap the buyers will still feel to reach the level of reversal, to reach the exact point the market will reverse. So, but what happened? Buyers supposed to fill the gap, but the market gap up or jump to the upper side. And the next candle that formed was green. So if the next candle form was green, and what is the name of this type of candlestick? It is a doji candlestick. A doji candlestick is indecision candle, a sign of reversal. So it's the sign that market is not likely to go up. So from sign of strength, weak, weak candle, and a weaker candle. So what happened next? I expect next candle to form red, right? So let's see if that is the case. Okay, see the seller's area, doji, a reversal sign, and number three, next candle or next level. Number four, next candle. Number five, next buyer's area. There is no reason why I say this area is next level, because I've already know if I draw a trend line, this is how it's going to look like. If I draw a double trend line, this is how it's going to look like. Okay, because I also include this rejection as well, this rejection, and this. So it is unlikely the price will go more down, form one more red candle, reject from this level, and reverse. So if that's the case, let's see what. But if the market did not reverse from here, it will continue to this next level. Okay. So let's see if that is the case. Okay. See, next candle is red, and this red candle reject from buyer's area. What will be in your next trade? Next prediction. My next prediction would be higher. Okay? It rejects from buyer's area. Also is weak, just like this candle here. Just like this candle, a weak candle, a weak candle at the resistance, okay, or seller's area. Then also a weak candle, a doji sign candle. So definitely the buyers will enter on the next candle. So let's see if that is the case. You can see from bias area, rejection from bias area. The first reason why I go with bias area is because one, price is at the bias area, rejected. Second, then a doji candlestick. Okay. And third, next candle will be green. So it's very simple. Okay. Then if the next candle is green, my next seller's area is here. Okay. Next seller's area is here. Just like this candle rejection, XLR area. So this candle form green candle, and the next last area is here. So definitely next candle will be a green candle. Okay. If next candle is a green candle, you can see what happened here. There was no rejection from sellers. Candle closed at the sellers area but no rejection. So I've already looked on the left side that this is the next sellers area. Okay. Which means that my prediction again will be a green candle, because no rejection from, like unlike this one we have rejection, just like the characteristics of buyers and seller zone. So here we have rejection, we have rejection, we have rejection, also we have rejection, but this time no rejection. Okay, so it's a sign the market is a sign of strength. Okay, a sign of strength that buyers are not respecting sellers. So definitely next candle here again will be red until when the price reach the seller zone. If there's any rejection, the sellers will definitely enter. Okay, but let's see if that is the case. Let's see if that is the case. Let's see that is what happened. Okay, you can see next candle green. Now, when the price reach the seller's area, which I've already marked out from the left side, and there's a rejection, what will be the next trade? Next candle here also will be red. Okay, you can see next candle red, and that is how, because seller's area Marubozu candle open. This Marubozu candle open, the next candle red. So that is that. That is it on how to trade on 1 minute trade. Okay, so if you master this trade here, this kind of trade analysis, there's no how you overtrade the market. Let me also show you another example. Okay, this one is a video I made recently. Okay, a video I made recently. You see the balance $5. It is not compulsory that you increase the $5 to 1,000 in a day. It might take you 200, it might take you 20 days for you to accomplish 1,000. At least you are making consistent profits. If you can turn 5,000 or $5 to 1,000 in 1 month or in 2 months. Okay, but just to make sure that this is a business. Okay, trade is like a business, so don't trade it like something like a gambling. You want to quickly make profit. That is why most of us overtrade the market, and when we overtrade the market, we end up losing or blowing accounts. Okay, so let me show you example here. Let me explain this trade here. Okay, um, I started from $5. I don't want to take much trade, but I decided to stop at $20. Okay, excuse me. Uh, okay, so let's see. Okay, now in this first trade, this is the first trade I took. Okay, but this one, I'm only taking trade on 3 minutes expiry time, not 1 minute. Okay, only 3 minutes expiry time, because I'm only trading the smart money concept in this or supply and demand, a simple supply and demand trading. Sorry. Okay, there's no need for me to explain more details on how to trade supply and demand. We already know how to trade supply and demand. We already know, because there are different ways. There are 4 ways in particular, 4 ways to trade supply and demand. We have um, um, for a supply and demand. Okay, we have rally, base, rally. Okay, we also have rally, base, drop. Okay, then also we have for supply, we have drop, base, drop. Then also we have drop, base, rally. Okay, so which means that for a demand, rally based rally, we can expect market to reverse if the price retrace back to this level, right? You can buy. Then rally based drop. Okay, for supply, you can expect the price to reach this supply and drop. Okay, drop based drop. Okay, you can expect the price to reach the supply and drop, or the base. Then drop base rally. Okay, expect the price, you expect the price to reach this base as demand, then buy. Okay, so this is the 4 ways to trade supply and demand. No, now let's see what happened here. Why is it? Look at the charts. What do you think I'm going to do here? Am I going with bias? or am I going with sellers? But remember, we already find the base here. Okay, the base. Okay, so what do you see? What do we have here? We have rally, base, rally, base, rally. Okay, then also the supply. We have the base, we have the base. Okay, then also we have um, the base. Okay, so we have drop, base, drop, rally, base, drop, base, drop. Okay, so now let's see now what is going to happen. But currently the price is now at the base supply. So my base supply will be something like this. Okay, so now I expect market to react when the price reach the base supply. Okay, so I expect the price to react when the price reach supply. So definitely in this scenario or in this kind of situation, I will I will trade on 3 minutes expiry time. Okay, so let's see what happens. Okay, so I started to draw the base. Okay, so I indicate some liquidity, which is the seller's area, which has been taken out with this candle. Okay, and price continue to go up. So you can see some reaction indicating some sellers at the presence. So, and what happened? A shooting star candle, a shooting star candle formed. So I open trade with 3 minute expiry time. So let's see, market continue to push down, lower, first next candle red. Okay, you can see a sign of strength. After a shooting star candle from this supply base, next candle is red. Okay, second candle green, and third candle. See the market drop for 3 minutes expiry time. So market drop for 3 minutes expiry time and close exactly at the base. Okay, so I'm not going to buy. Don't say because the price is now at the base here and decided to buy. Don't do that. Okay, don't say the price is now at the base and you buy again. Why must you buy? You've already indicated that price is likely to go down. Okay, because from here, after a bullish movement, there's a market shift. Okay, there's a market shift. Okay, price is creating swing low, swing low, and this swing low here has been violated. So market shift from bullish to bearish, or change of character from bullish to bearish. So this now indicate the market is bullish, is bearish market. So market expected to go down, not up. Okay, so I'm not trading in this kind of situation. I'm only focusing that sellers will go more down. Okay, and see what happen. The sellers, the price drop. So here it will be very wrong to go with buyers because the price is now at the base. Okay, don't trade like that unless you are trading 1 minute expiry time. But if you are not trading 1 minute expiry time, don't trade that. Okay, it's wrong. So next trade here. Okay, look at next trade. See my balance now is now 7.76 dollar. Next trade here. Look at the market structure. We have rally, base, rally, base, drop. Okay, but market, the drop here is not smooth, and the market continue to push higher again. So definitely this is what we call rally. Okay, and we have base again. Okay, we have base, a very multiple candle, so many multiple candles. So if you look on the left side here, if you analyze what happened on the left side, you'll be able to find, well, you're going to know where to predict, what to predict the next market here. Okay, let's do that. First, I'll first indicate the sellers area as the trend line. This is sellers area, okay, as the trend line. What of the buyers area? Buyers area as the trend line, right? Because we have rejection, 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 and reversal. The sellers area, rejection, 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 and rejection, but fail to go down, instead continue to push higher. So definitely this is where the breakout occur. So before the breakout occur, we have already accomplished, or we have already established the the demand, which is, we have already established demand, which is rally base rally. Okay, so the demand is initiated here. Okay, the price almost touched demand, okay, but failed multiple times. So that is why we call the bullish uh, bear trap or bull trap. So definitely, I'm not satisfied with the kind of movement here. So my hoping the price will come down again, come down again to this demand, then I open a trade with 3 minutes expiry time. That is why I call determination, okay, and understanding. Okay, remember the first word I said about trading consistently, determination and understanding. Okay, so let's see what happened next. Okay, I have already create alerts. Okay, once the price reach the level, I will open a trade. I'll be alerted, I'll be notified, so that I'll open a trade there. Then I'll continue to look for another trade opportunity. Okay, okay, finally, the market is now at the level. You can see price is now at the level. But I need to make sure that there is a sign of reversal before I open. I cannot just open trade now because the price is at the level. You can see the main time is still 12 seconds. So it is possible within that 12 seconds the price close strong below the level. So that's why I will not open trade immediately. I'll wait for the candle to close. So let's see what happens. I see some rejection showing sign of sellers, meaning that sellers are now present in the market. Okay, so immediately I saw this rejection, I opened trade immediately with $3.76. Okay, so see, first candle is green, first candle now is forming green candle, and third candle red. So definitely, I've already accomplished a winning trade because rally based rally give us demand, and the price reject from the demand zone. So I expect the price to go up in the next 3 minutes. The market might still come down again and violate the demand, but that is not my concern. My concern is only when the price reacts from the level in the 3 minute expiry time. So that's why I say your psychological in trading binary options should be quite different from trading forex. In forex, you can expect the price to go up. Okay, but in binary option, that's why I like to trade binary option. But in forex, even though my prediction is right, sometimes the market will violate or the market will not respect my prediction. It will still go down and hit my stop loss. Okay, but only if you are managing or risking a kind of low amount. Okay, but then you will know that you are not you are not supposed to open a trade to this level. At least this will be your take profit. Okay, open trade here, take profit here, or take profit here. Okay, meaning you can expect the price to continue to push higher and reverse from here. Okay, So if you are risking something like this and reward, if your risk reward ratio is something like this, you can make profit in binary or sorry in forex. Okay, so that is that. Now my balance is now 11.22 dollar. Okay, I think I remember this trade. I almost make a mistake because this trade look like turtle soup pattern. Okay, turtle soup pattern. It looked like turtle soup pattern, but I almost make a mistake in opening trade here. I've already find out okay, this will be stop hunt manipulation, change of character, because after this drop, stop hunt manipulation, change of character, and supply demand level because it form drop base rally. Okay, but immediately I find out that there's still some level here, a demand rally base rally. So I quickly observed that. Okay, but the next one here, next trade here, I've already indicated that okay, if price reach the level, I'll go with buyers. Okay, so I look on the next chart, on the next trade opportunity, and this one we only have a single without any disturbance. We have a simple trade analysis. We have drop, base, drop. Okay, base, rally. So my base will be from here to here. Okay, multiple candles as the base. So what will be my expectation is that once price reach the base, I will go with sellers. Okay, I will go with sellers. Also, we have some buyers around this level. So once price reach the base, I'll go with sellers here. And this one is very simple. Let's see. You see price start to go up and a rejection occurred when price reach the base. Can see rejection. Can see rejection. Candle close below. I quickly open trade immediately. I open trade immediately, and what happened? Because the price have already rejected from the base, and the candle is very weak. So what happened? A very strong red candle formed. Okay, from the base, and the base, the supply here is drop base drop. Okay, price continue to go down and down, and that is how I won the trade. Okay, so I move on to the next trade. I see the price is approaching the level I was open to open trade. Okay, I was open to open trade here because this is like a tortoise pattern, a stop point manipulation, a change of character, and a price reject. But I'm not satisfied. I was hoping next candle will form red so that I will go with buyers. But as I was looking at the candlestick is very strong. It's not okay. Okay, I think the network. I'm having some network problem. So, like I was saying, that price finally reached the zone, but I'm not still okay with that. I want to wait for the candle to close. Still, we still have like 30 something seconds for the candle to close. So I continue to see that a, a strong candle start to form. I look at it, okay, maybe this is a wrong analysis. That is why it is not safe to open trade if candle is still running. Open trade when candles have already closed. Okay, and market close below the demand. Then again, I look at the chart once more. I look at the chart, then I saw rally base, a small base here, and has already been mitigated and continue to go higher. So rally base rally. Then I noticed that this price almost touched the base, but unfortunately failed to touch the base. So definitely, the price is now at the base. I'll wait, and also rejection. I'll wait for the next candle to form before I decided to open trade. Okay. So next candle form, green candle. I open trade on the next candle. So let's see what happened. Okay. Then again, next candle form green. Okay. And the price continue to go up. Because from this demand, the price continue to go up. You can see a very strong candle. Okay. A very strong candle. Okay. Now the next the another mistake a lot of traders do is that we also have a supply here. We have a supply which is the base, drop, base, drop, drop, base, drop. Okay, drop, base, drop, and price is now at the level where you can open trade with 1 minute expiry time, but trading 3 minute expiry time is not safe because this movement here, this movement emerge from demand zone. So it means that buyers are now active in the market. So it is likely that buyers will only pay attention to sellers for 1 minute here, expecting the price to reverse for 1 minute and then continue again to push higher. So it's possible. That's why I don't trade 3 minutes like this. Okay. And that is how I was able to make that is how I was able to make $20. Okay. $20 with just 4 to 5 trade, $20. Okay, and this 4 to 5 trade, it's now up to 1 hour. Let's say 30 minutes. 30 minutes. Okay, I only spend 30 minutes on this trade section. So which means that I can wait for another 30 minutes to open the trade, another trade section. Okay, then also I can still make up to $20. So definitely I'm making profits consistently. So that's why it is not necessary you make profit of $200 in a single trade section. You can divide it into first trading section. First trading section, $10. Second trading section, 20. Third trading, 50. Before you know, the last trading section, you take it up to 200. Okay? So making trading buying option is different from forex. Forex, you calculate your risk management, your money management as um, risk reward ratio. But in forex and by binary, number of trades and number of the amount of the amount you are investing. Okay, so that is that. In our next class, I will show you another trading strategy you can use. Okay, I have so many trading strategies, but I will show you another trading strategy in our next class. So I think I should stop here for tonight. Okay. I will send you the video and also I will send you the PDF so that we watch, so that um read. Okay. There are so many things I will teach you in binary option. So I think this is the first step. Okay, this is the first step. So I will teach you so many things to consider trading in binary option. Okay. So in our next class, I will explain to you. I will show you another trading strategy: supply and demand, fair value gap, support and resistance. Okay. So I think I'll stop here for tonight. And that will be all for today.